Hello, good morning, good morning. Man, I had such a long night last night. I couldn't even take advantage of these sells this morning, but there were such nice sells. So good afternoon, morning. I caught a sell before and received 80 pips profit. Awesome, man. You see, just right after FOMC, like what we spoke about, you're not gonna miss the move. You're never gonna miss the move. You're still gonna get the volume the next day. So I'm waiting for a break of the lows here so price can continue moving down. Two fake outs on the top, but no break. But no break of the lows. I was waiting for the same to sell just to keep going down. It can do it. Yeah, man, this thing can just keep moving bearish. Do you think she will still go lower today? Yeah, I think so. I think there's a pretty good probability. Well, I'm not buying. I'd rather take a loss than a sell, to be honest. You know, I don't want to mess with the markets when they're directional. Just like yesterday, you know, we took like all three positions were sells. And I don't see a reason why to buy right now. So I'm thinking, you know, if we can start breaking a few lows, some lows over here, I'm waiting for that London Open volume to come in. So it can keep pushing price down. Got 5-minute candlestick closing. The 5-minute right now looks nice to actually sell off. All right, let's see if I can get triggered here. A break of these lows. Would be nice to get that support being formed. If it forms, that would be awesome. To get a support here. Because the rebreak of those lows should also confirm the momentum. Should confirm the momentum. Damn, but yeah, such nice moves this morning. Holy. Yeah, but to be honest, you guys, that signal would be saying TP2 hit in literally seconds. like candle just broke. There was a setup I saw there. Candle broke and it pushed like 30 pips. They pushed like 30 pips in just that 1 minute. That's what we get for FOMC, you know? That's the type of price action we get. That's why right now I'm anticipating that when price breaks again, I don't want to see drawdown right now. I just want to see this thing continue to move down. It starts to draw down, then maybe, you know, it's like it might retrace, and you know, I kind of avoid such a thing like this happening. That's what I want to avoid. That's why we're waiting for these lows here to get broken. Try to avoid as many whips as we possibly can. And let's get this. Let's get this. Let's get this. It's now bouncing from the 1 hour support and 200 EMA. Just need accumulation to push it, to push by it. Yeah, look at this. Nice doing the opposite. Bummer. But anyway, if it fakes out above here, you know, I just did a small liquidity grab. right here, because I think some brokers pushed a little bit further, but like my broker pushed a bit further below here. That was a little liquidity grab. You see, it's kind of like finding, you need to find consistency in the chaos of wicks. So it can be quite confusing what break to take, right? So you just want to see what are the safest areas for the break. So this is also a good sign in a sense, because if it's gonna fake out now, we could use that fake out confluence, because I still don't think it's gonna go up. It's just gonna trap some buyers in here and then move down. But hands up in the chat, people who traded FOMC yesterday, put a 1 in the chat if you guys traded that craziness. How was it? I didn't see the price action, but I saw the wicks. I was like, damn, accounts got blown. Remember, like we said, chat, I'm gonna have my popcorns ready, because this is what we've been talking about. Like literally, it's a story that's so old. Retail traders always getting in late. You know, like we said, like this has already been priced in. It's been priced in here since Powell's been speaking since the 22nd of August. So, you know, this is a perfect, anybody who doesn't know about fundamentals and how pricing in works, this is a perfect example. Because, you know, we've got the right market conditions to show you this now in real time, because we've been speaking about this for such a while now, since Powell's been talking. Because once Powell finished his speech on Friday the 22nd August, that's when we got clues that rates were going to have a high probability of getting cut for the US dollar. So people, instead of waiting, smart money doesn't wait. They need to get into their positions, right? Because they move markets, they don't have luxury of waiting. They have to get into positions early. So that's typically how you do your due diligence when it comes to fundamental work, when it comes to macros. So you have to already visualize where price is going based on the data that you have right now, because it's all a probabilities game at the end of the day. You know, so there's a higher probability price to move up, so people already get stuck in. You know, this is a very important skill because it's going to help you in overall investing, you know. Like, this is not investment advice, but, you know, even people who don't trade, they have investments, correct? They invest in retirement funds, they invest in the stock market, in bonds, they in indexes. And I think, like, once you understand that, it's a very powerful thing. You know, like if you look at, for example, the Nifty 50, they had their elections, and when during their elections, you got Nifty 50 retraced. It created really nice opportunities to buy back into that index. You know, like when the stock market crashed, when Trump was made president, and we had the stock market crash. You know, that also created opportunities. Hey, where'd my position go? But yeah, see, it's like the thing is, like, retail traders are always the ones waiting till the end because they don't know. Most of them, they're just too lazy to actually give a shit about that. So they just rather wait for the folders, the NFPs, the FOMCs. It's much easier to do that because the other stuff requires just a bit of experience and a bit of due diligence. But it looks like, you know, it was already priced in, and that's now it's like price, the price is coming down. Man, do you think we can still get this fake out though? Like, this just doesn't look so good. It's kind of ruining it. It's kind of ruined my structure. Wait, let me see. I had an entry. I hope, before I was up like 95 pips, then price was 2 pips away from BE. Went back up 80 pips and I got spiked. I got spiked up and I closed. I got about 1%. I tried very, very light, no crazy stuff. That thing looks like on the 1 minute. Oh, on the 1 minute there, on the 1 minute there, it looks like, what do we even have? 300 pips? Jesus. Man, look at this. It pushed down 272 pips. But even if you calculate the previous candle, where the volatility started from, based like 358 pips in 2 minutes. And then it pulls all the way back up in a few seconds. Holy. So from this low to that high, another 390 pips. There's no way, like, man, when you trade such a thing like this, you gotta be seriously off your rocker. Real cowboy. You're not even trading at this point. You're just trying to hit it big. It's a gamble right here. I watched FOMC, didn't trade it though. I wanna watch one of these streamers. I'm sure people were streaming that event just to see how much volume came in. It's one thing to see it in hindsight, but to see it actually happen in real time. Did anything crazy happen, guys? Like, right in the chat, was there any streamer who took like massive loss or something like that, or like a massive win? Because I know there are people who trade these events. Man, we could watch it right now. I'm sure that's gonna be hilarious. Did Raja trade it? You know, Raja usually trades these things. NFP. You got a video? Post it in the Discord. Let me see. Did he trade it? Good business for his broker if he did. Oh, no, he didn't. Ah, smart man, smart man. Yeah, let's stick to the NFPs. Not so bad. NFPs are wild, but you can somewhat survive them. Man, I don't think you survive a 300 pip drop. I don't think you survive that, especially if you're looking for buys, because like people were looking for buys. You know, that's the thing. Like, we were all convinced that, you know, we're kind of convinced price would go up. But obviously at the same time, we know that it's been priced in already. But it would still be part of the narrative that price should go up. Because obviously dollar weakness, gold strength, textbook. But you see, that's not always the case. Patrick Wieland. Patrick Wieland. Hmm, 10 hours ago, 15 hours ago. Let's look at this guy. Okay. Well, it started like immediately, right? It hit at when he came on. Or how long did it take? You check the time. Oh, there it is. Why is he trading though? 24,000? It's like, what is that? 24,000. Oh, there it is. 10, 9. But what is this? I want to see gold. Oh, this is something that already happened. Check Trading Paradise. How he did his FOMC trade. Where looks like I kind of like skipped ahead too much. Yeah, I think sometimes people wait for the volume to kick in, right? And then take the opposite direction or something. That would be a good strategy at least. Instead of just trading it off the rip. Trader's Paradise. Last night he said so many viewers, all gamblers, come today. Oh man, look at gold. Gold is doing the opposite. Hey, Architect. Nice to see you back in the Zoom here. On a less serious note, how have you been, Vic? Long time no see. You got some gym games from what I can see. Yeah, I've been trying to stay consistent with the gym. Yeah, that's true. I've been trying to do it like 3 times a week. That's kind of what I've been focusing a lot on. Got gym, got some projects here and there. And waiting to see what the markets do in terms of FOMC. But now we got our answer. But look at this now, price is going up. Oh, I thought this was going to be such a easy, quick trade for starting off the stream. How have you been, Architect? What have you been up to? Where have you been? Actually, good question. Where have you been? All right, so I don't see anybody here who's actually trading the FOMC. Looks like price is running away from us.
Why are you running? Why are you running?
Maybe we can catch it up there. Get a retracement up first and then look for a sell continuation. But we'll see how the setup looks, how it's going to look here in a bit. Buy the rumor, sell the news. It melted 300 pips in 10 seconds. Problem is that like the spreads get really huge. So even like 300 pips, I wonder how big the spread is. Had a character building period. Had to go. Oh, you had to go into hermit mode and lock the F in. I missed you people. It's good to be back. By the way, 1 minute consolidation breakout TFX concepts been working beautifully. Yes, sir. You know, that's like the only ways that you can catch in such a volume like this is just through those breakouts. Because the candlestick is not going to close. It's going to push way too much. And the good thing is, at least when you get the breakout, it's more like directional. It's more confirmed because there's so much volume in there that if it breaks, it should just keep running. Because like, you know, these trades you take and you're like, damn, I wish it just came back. If it comes back, I'm gonna get in. Those trades you hesitate, but it never comes back. You know, so that's kind of like what we kind of would expect. It doesn't always happen, but it's like something we can anticipate in a sense. You know, like for example here, like you see the volume, right? You see it's a sell, but you hesitate and it pushes a bit more. Then you're like, damn, okay, if it comes back, I'm gonna take it. Then it just keeps going. It's a beautiful little sell-off right here. Look at this little play. This is a beautiful sell right here that happened at a 2:02 a.m. So you sell right here and then it just melts. But it did take some time for the volume to come in, eh? It was, I think it was, the daily was still hovering like 0.20%. 2 hours before the London opened, roughly. It wasn't like trending throughout Asia. So that was the odd thing about it though. The volume came all at once. Check TGR, he made 400 grand. Bro, TGR makes money from selling courses. That guy can make $1 million a month on his courses. Like, he's a dope guy. I like his lifestyle videos. But it doesn't even show. It's only trading view that he shows even. Like, this is all you guys see. It's just this trading view things. You don't... Oh, okay, what's this? Oh, that's the first time I'm seeing that. Ah, so he actually shows it sometimes. Yeah, but I would be a bit skeptical about this. Like, if I was making $1 million plus a month selling courses, also, I would feel less inclined to... You can get lazy to actually trade. Maybe you can trade every now and then, but... It's not as it's much easier this other way. So, you know, pretty good for him. But I gotta work for my money, you know. Gotta show up onto the charts, actually put the work in. Actually try to wake up when I need to wake up. Stay consistent, stay disciplined. Because I can't afford to fuck up. You know, like, so every month, like, I need to be as disciplined as I possibly can. You know? Because this is still the vast majority of my income. Still need to build portfolios. But man, this thing is just skyrocketing now. Damn. I would love it to drop just a bit more, because now it's like gaining quite a bit. It's gaining quite a bit. I'd like it to drop a bit more. Like maybe towards, yeah, this is doing a whole retracement. Pretty straightforward day though. Pretty straightforward day when we opened in London. Looking video analysis. All right. Me and my brother, we work hard for our money. You ever watch that reel? That Jamaican kid? Quite motivational. Work hard for my money. Is this a video? Whoa. Spreads don't look too bad though. You got in earlier. Damn, look at that thing fluctuate. Get ready for a huge dump. Oh yeah, that retracement has come in nicely, huh? But it's given back a lot of gains. It's the daily is up. It was up. It touched 0.20. The highs of 0.20s. That's a pretty big move up. Which from here to here about like 96, 97 pips. Pretty nice distribution though. It just did one small retest off of this mark. One small retest to keep pushing up bullish. Vic, did you buy the PC you're using locally? Yes. I think my specs are Core i7, 14. I think it's like 14,000K. It's the upper range of Core i7 before you get into Core i9. And the GPU is a 4070 Super. And just like an MSI motherboard. Yeah, but I think those are like the two main things anyway. The CPU and the GPU. Let's see, Vic, watch the video. You see how much dump came in quick? Wait, where is it though? I don't see it. Where the hell is it? Because video analysis was this guy. He just showed like a push. Oh, okay, okay. Sorry, bye bye. I see it came in later. Oh, it was a top wick. Oh, this was the okay. Now I see. Now I see the 1 minute candles. All right, I get which candle this is now. Now this one should dump. This is the one that should dump, right? That previous 1 minute close, and then this is the one that completely melts. Damn, Daniel. What happened here? Did you close? Like, did their account blow? Negative 0.97. Hey, at least you tried, buddy. No risk, no Rari. But it doesn't look so bad. It looks like you could have actually traded this. If you took the sell, you could have caught this move. But obviously the drawdown, the initial drawdown for the buys would have been the problem. If you can survive the drawdown for the buys, then if you take a sell. Wow. Man, that's crazy. That was 300 pips. Let's see, Gary Fucham got 10 pips, but scared to close like always. But scared closed. Oh, you scared closed. Now, I'm contemplating whether I sell below 36.46 because we're already visualizing what we want to see the candles print. You know, and once they print, then we can already feel confident to take the trade because it's what we already anticipated. But I'm just wondering if like a sell below here, it's like, it's not necessarily trending if it breaks these lows, I think. Gold is taking out buyers and sellers. What did GJ do? Let's see. Yesterday, GJ. Oh, it had a few like volatility because of the yen. Here, looks like yeah. We also sold off. Sold off on GJ. About 30 pips. Nothing too crazy. GJ is still lacking volume quite a bit, but now I think now it's finally gaining the momentum it needs to break above 200. So that's the only difference. Now I think after FOMC we can now maybe start to see GJ more. Oh, we're gonna have a good probability of GJ now respecting 200, breaking above resistance, and then continue moving up here with this clean range. Clean range of the HTF. There's a bad liquidity grab here. Because when the London Open, you see, that's the thing about the London Open. It always has these like London Open fake outs. You got to be a bit cautious about. So that's a London Open candlestick. It came down, broke below these lows. Then it faked out all these sellers. Now imagine the people who don't manage risk and they just hold the sell because they're really convinced that price should go down because of everything that's happening in the market. Then you hold so much drawdown. It's already up here like 146 pips. So that's the whole idea behind a stop. You know, when you get your stop hit, the best thing is just gonna close your trade. Correct? Because that's already invalidated the idea that this candle would continue to move down. So there's no point holding it anymore. Or like, you know, what if? What if? What if? What if? Let's see. You're thinking probability the daily candle. The daily can flip today. Oh, how wasn't that close above a resistance for you? Because I was still, even though it's a signal, right? As you mentioned, that was a valid trade. You could have taken that buy off like a shotgun entry. You know, you got liquidity grab confluence. You know, put your stop loss below here, expecting price to continue moving up to fill this range, right? Like that's fine. It's all about like how you also want to take the trade. But for me, I was like thinking maybe if I'm gonna give a trade right now, I want to stick a bit more with the trend. You know, but this definitely, you know, it still played out quite nice. Accumulation, close above resistance. You got SMA confluence, liquidity grab confluence. That's why we say risk is discretionary in trading. You can never have two traders who trade the same strategy always take the same trade. I feel like something could set up here. So we create like some form of a resistance, but we also have a support. So it would be nice to see this become like a point A. So that becomes a no trade zone for a potential sell continuation below like 36.46. But you're just sitting on your hands, wait for the market to come to you. You're that crocodile in the water, just waiting for the gazelle to come to you, and then you're gonna pounce. Don't get out the water, because you get out the water, then you won't catch anything. Expecting DJ to start behaving a little better anytime soon above 200. Yes. Then hopefully the intraday time frames become a bit cleaner. Get a little bit more of a push. There's an easy 3,000 pips and another bounce 3,000 pips. TP so sweet. Oh yeah, Powell. Thank you, Uncle Pow Pow. What happened to the music here? Damn, Goldie, why are you going the opposite direction? What about the buys we have clean range? Yeah, you gotta dodge it. Stars aligned for gold sell this morning. But Vic, isn't it accumulation is a reversal signal, and how can we know whether it reverses or continues? It depends on the setup, correct? Like, wait, Vic, isn't accumulation is a reversal signal? It is a reversal signal, but it can also be a continuation signal. So it depends on the setup. So for example, let's say if you took like a sell over here, let's say if there's like a support that formed and you took a sell, and then this is happening right underneath your sell idea. That's more of like a reversal signal. But remind, it can still continue. But the thing is, like, it has to respect the highs and break the lows so it can continue moving down. Similar thing like the trade that we took yesterday. We had that smaller reversal signal, but it broke the lows and then continued down. So most of the time, it's like reversal signal. If you see that there was already an entry prior, and then price is consolidating underneath the level. But you see, in a situation like this, there's no real level over here. Price just came down. Price came down, it distributed. Because like this level is so far away. That's already been distributed. It's already paid traders off. Like this already dropped here like 154 pips. Correct? So, but if this happened like sooner, if this happened sooner, like right here, that's usually more of those reversal signals. Because they don't push enough for you to secure anything. So it traps you in the trade and then goes against you. I think this one was just like a buy confirmation because it also didn't break the lows. It didn't break any key lows. Instead, it broke the highs and then it confirmed the direction now to the upside. So like that's how you're going to use it. Like also yesterday's trade that I took, the last trade that I took during the... Oh, all right, chill. Man, these ads. Yeah, so look at this. This was like a reversal signal right here. Because remember we spoke about this when I got off stream. I was like, watch out for this range. You got sells below here and you got buys above that other resistance all the way up over there. So what happened? We didn't break above that resistance. We ended up breaking the lows instead. We broke the lows with clean range to the downside, and we also got reversal signals. So what you're seeing on gold right now was this. Yeah, that's what you're seeing on gold. Correct? But you see the difference? These are next to the key levels. And it's a little bit more tight. So that's more of that reversal that played out here with a clean range. It's basically the same thing that happened on gold right now. Broke above with clean range and moved all the way up. And then I was like, okay, so if we had this previous move and that move is already done as well, and it's consolidating above this area, so, you know, this is a reversal now to come down. So it's like, you see how the market mirrors itself. Here it's mirroring itself. And then here it's mirroring itself. Then as well, it mirrors itself in the middle with the clean ranges. TFX concepts. You know, I think it's pretty good. It's pretty good. Like some traders also use similar ideas here to trade. You know, like clean ranges, accumulation, breakouts. Because the reality is markets only move in 3 directions. So traders sometimes can have similar ideas. Because we can only see markets move in these 3 ways. But it's just the way you break it down and the way you build your narrative that kind of gives you an edge and a unique trading style. So then your consistency will also look slightly different. Your results will look different. W on the risk management. Oh, nice. Oh, yeah. This thing just completely faked out here. It was all sells. You know, sometimes you just like, you have to be on the right side of the market. No matter how good the buy was here, looks like markets were just coming down. You know, when market picks a direction, there's nothing that gets in the way of that market direction. It will just keep moving in that direction. So sometimes it's not your fault. It's just like the market has picked a direction. So it doesn't matter how good the setup is. So, the only thing you can do at that point is manage your risk. Remember, drink more water, chat. Maybe we can still get an easier trade because the way these sells happened earlier on, they happened so quickly. It happened so quickly. So maybe any time now, price can just start dumping again. I took the same trade, been watching you back test on YT, been a great help. Thank you, ADF. Appreciate you watching those videos. I don't have to make those videos, but I do think it's important to also make those videos. But those videos get like the least amount of views, but you know, I still gonna make them anyway because I'm not doing this for views. If I was doing this for views, then I wouldn't be doing this at all, because you know some of my stuff here get very low views. Very low views. At least the videos do. Videos get kind of low views. Appreciate you guys supporting the stream though. So you guys tuning into the stream mostly. Mostly the stream. And don't forget, I also post my trades here too. I post my trades here too. And if you're in the mentorship, make sure you make use of that Discord channel. That's where you can ask me like questions. You know, you're gonna go through the bootcamp and you're gonna like ask me some questions. But yeah, this is where we also post. We post the setups here too, as well as on Discord, and as well as the videos, so you can see full transparency of me taking the trades. You know, I think it's quite important. So you see my trades over here as well. I'll just show you my trades down over here. And yeah, then this is what I do. This is what I do so I can be transparent with you. We're gonna do simulation. Oh, but next simulation we're gonna do next month for YouTube. But this weekend we gotta do simulation this weekend for exclusive. Also, man, simulations. If you join the simulations, you can also ask questions in the simulations. You know, but I get it. Like the timing might be a bit off for some people, but you know, it's the option is always there. Man, look at this. Price has just completely given back all the gains. 0.13%.
Why are you running? Why are you running?
What is your plan now? Are you going to make a trade on gold? I wanted to make a trade, but it's going the opposite direction. Because you see, like the thing is, we don't know what gold is going to do today, because now it's giving a mixed bias. It's pulling up. So the daily, it could just flip, you know, the daily could flip, and then maybe we start to see the bullishness come back into gold. For some reason, it retraces first. And then you have people starting to buy gold here. So you gotta let the market, like the market will show you its hand. Because right now it's still too early. We just had FOMC yesterday and prices coming down. But now it just tapped into like an accumulation area right here. Just the same way, you know, when we have our accumulation breaks, we're gonna see sometimes price breaks, it retests, and then it continues to go down. So that's the same thing that's happening right here. Because we got previous accumulation on the daily, it's retested. And this could be the start for price to move up. Because the thing is, if it moves up, they'll be forced to buy. Correct? Like even if they don't want to buy at these levels, they'll be forced to buy, and then that'll keep pushing price upwards. Yeah, gold. Gold says I don't belong down there. Gold might be going up because Joshua Woods entered buys with his full account. Yo, Woods in the chat today? I don't think I saw him. Lol, this is manipulated. What time are you trading every day? London Open. This 3 a.m. Eastern. Sheesh. Maybe gold can just keep going up, and then we're gonna look for buys then. Price just keeps moving up here. Fill out that range beautifully. So you see, this is what I mean. And this is the whole idea behind TFX concepts. I always used to look at price, and I used to wonder like, how could I have caught this move? You know, before I never used to think about it this way in terms of like there's an actual inception before these moves happen. Correct? Like it's quite interesting. The way you look at markets in year one is super different from how you look at it like when you get more experience. So for me now it looks so obvious. Everything just looks so obvious, like it was under my nose the whole time and I couldn't see it. Right? So I was always too caught up in like, I don't even know, like looking back at it now, I always feel like you kind of lost. You always kind of lost. You're really caught up in just the candle somehow. In a sense like this. This is the best way I can explain it. Like something like this. Like you don't really know what's going on. It's like you're kind of confused. Right? But now when you take a step back, things start to become a little bit more clear. It's the only way that I can explain that. But yeah, now you're going to look at how could you have caught this move? You know, a lot of the time we're always in here. We're always in here and you can still catch continuations from here. But once you start looking at how the moves actually form and start, then you start to get like a little bit of a clue in the market of how to take your positions. You know, and that's how it started. So these are all TFX concepts. You guys know already, shotgun plays, you know, our confluences. We don't really have any inverted head and shoulders here, I think. Actually, haven't seen the head and shoulders confluence in a while. But yeah, mostly liquidity grabs, shotgun plays, swing entry models, clean ranges, and then the macro fundamentals, the overall direction of price. All really important things to understand. Then the timing as well, the timing aspect of it, like when are your moves happening, so you can have a better read on price. So you understand like, okay, so you know New York can do this, London session can do this. Because they do behave slightly differently. My pre-NY trades are not the same as pre-London because it is a different time. It feels different. How to work on confidence. Wait, let me try and pull this up. See, how to work on confidence. I mean, I can't hold my trades for long. Even when market goes in my favor, I just get out. It's a psychological thing. It's like, it's quite a normal thing a lot of people struggle with. So yesterday on stream, I told you like when Fidelity did a research on the best traders, they were dead people because they never touched their long-term investments. The problem is people are just not good at holding and structuring themselves properly. Because sometimes people are like, they invest in things they can't differentiate between a long-term investment and a short-term investment. So when you get in stock market, when you get in crypto, these are long-term investments. You're giving yourself like 10 to 20 years, 10 to 20 years plus. And they're usually good investments like when you start at a younger age, obviously, because it takes time in the market to mature. But that same mentality is just the same problem that you're facing, a lot of traders face with even just like scalping. We're just not good at planning ourselves properly and then holding it, you know, because we feel like we need the money. And that's where most people mess up. You know, they get into crypto super early and then it goes up and they're like, damn, I need this money right now. Where you're forgetting that this goal is to just keep moving. You should even forget about it. It should just keep going. Because you've set yourself a plan, 10 to 20 years. You're not even thinking about it because you're wasting your time thinking about something like that, you know? So in trading, just set yourself a goal, a similar goal where you're going to say, if this is a running trade, I'm going to keep this as a running trade. Correct? Like you have to get into the trade already knowing if you're going to hold it or not. You can't make that decision when price is still in motion, ideally. So let me tell you the best example. We had FOMC yesterday. You're seeing a bunch of selling pressure in the market. You know you're already in a good environment here that if you hold a trade, you might get a freaking bumbleclot of a trade. Correct? You know this. You know this because of your experience. So there's a higher probability your running trade actually runs pretty nice for you. So you're willing to take that risk to say that let me hold this trade because the environment right now is such a good environment that it can actually run. And if it stops you out, no big deal. You know, you get stopped out at break even, get stopped out at stop loss, no big deal. You're already accepting that risk. So when you come to holding, that kind of experience can help you to understand what the instrument is currently doing, the potential of it. But if you want like more technical advice, clean ranges are pretty nice as well. So you can see that price usually has an option to move from here to here. So you got a probability that price can fill this range. right? And depending on how good the setup looks to you, then you can say, okay, you know, it's lining up nicely technically, and I think I'm going to hold this trade because of the potential it has like this. And you also got your SMAs. You know, in our simulations, man, I think the best way I can explain this to you instead of giving you the real-time examples, just go on my channel and watch the simulations playlist. Wait, let me see. Can we get a playlist? Do play. It's a lot. Yeah, it's actually a lot to explain. Just go and watch this playlist. And it will give you like an idea on how to do it. You know, and I think once you start doing it, you're going to slowly build confidence. Once you start seeing it happen over and over again. Because, you know, at first, usually when you start trading, you kind of paper trade for maybe a month. You know, you're going to watch something happen for a month. And then you start actively taking those positions. Because you've seen it happen now consistently. But I don't expect you to see it once and then start taking it. You're going to have to see it happen. And then you're going to start. Because, you know, the thing is, if you're looking for it, then you're going to find those opportunities much easier. But if you're not looking for it, then you're not going to find them. Shall I hold my trade? I think you got to send in a chart. Send in a chart here on Discord and then we can see the trade. Because like to say, can I hold my trade? I have no idea. I don't know where you got in. What your entry is, what your stop loss is. See, break, retest, sell off. Nice, very clean. Very clean chart work here. So on the hourly time frame, I think you also got like small fake out situation that happened here. Candle closed below support, closed back in the range, broke above the highs, and then continued moving up. Awesome. Awesome trade. Now it's giving a potential entry here now. Well, unfortunately, this is when the daily candlestick is a doji. So there's a lot of indecision in the market right now. Daily is a doji. It's currently down negative 0.02%. What do you think about just adding trades every hour with fixed stop loss? Hey, good morning. I don't think it's a good idea. You know, the market, like many things in life, is designed to pull money away from you. It's not meant to just make you rich like that. So the more disciplined you are, the more you give yourself a chance to actually make that money work for you. But if you're putting a trade every hour, you're not making the money work for you. You're still working for the money. And the harder you work, the more you lose. You know, that's why the rich, they love investments like this, because they love to make money work for them. So the idea is you want to have a stress-free time making the money as possible. You don't want to work hard for your money, right? So if you stick to like 1 or 3 trades a day, you can reduce your risk. You can manage your risk a lot better. You can avoid the exposure to volatility that's naturally in the markets on a short duration of time. And in the end, you know, you're going to have a higher chance of having a more stable P&L, because you can fight market volatility. If you're taking a lot of trades, your trades are also going to be losing trades. You know, it's like the casino. You know how casinos make their money is because they know the longer you're in the casino, the higher probability they're going to take your money. So the longer you're in the market, the higher probability the market's going to take your money. It's the same thing. That's why people who count cards are not allowed in casinos. Correct? People who count cards, they know when to bet less and then when to bet high. So basically they cheat the system and they can always beat the casino. You know, because they know patience. They understand patience. They know maybe because it's a casino, they have to sit and play, but they understand the value of patience. Managing risk until you start getting high cards on the table, then you start going heavy on your positions. You know, but in trading, you don't have to trade. That's your luxury as a retail trader, is that you don't have to trade. You can do equivalent to counting cards without actually spending money. So you're going to like wait for the market to set up, and then that's when the cards are high on the table. That's when you take your trade. You know, and you can limit that to like 1 or 3 trades a day. Trading is for people who have money to lose with no bills. I wouldn't say so. Like, it just comes down to like how, look, if I lost everything today, I would still trade. This would be my avenue of getting it all back. You know, it's all about the skill. If I was to start from zero today, well, obviously not completely zero. You still have to work a 9 to 5, save a little bit of money. But that's why I say, if you can take a $500 account in the next 3 months to $1,000, you got a skill right there where you can now really exponentially compound your account. You know, the compound interest on a skill like trading is so exceptional. It's not like, you know, something that takes you 10%, 15% a year. But it is super exponential. Yeah, because you can get options to get funded. You can get funded. You can compound your money. There's like so many avenues to really excel, like in terms of getting interest back on the skill, if that makes sense. I'm already up on the year here, 230%. I'm up on September, 20%. These are all trades, called out signals, showed you before and after pictures, done them live as well. Have videos of them too. So that's what I mean. Like, you're not, this is not investment advice, by the way, but you're not getting these returns in a money market fund or a lot of the other avenues, which are a lot safer, which are good as long-term investments, but you're not getting these types of returns. That's why I mean, like, focus on the skill, because it's a skill which pays you at the end of the day. It's not necessarily what's in your account, because that's going to take care of itself. Lately, I'm starting to think trading is hard than an actual 9 to 5 job. Yeah, it is. It is hard because you have to be a lot more disciplined. And the thing is, like, the thing with money is we're not taught about money, you know, so it's like it's so hard. Like, one thing about life, like, managing money is so difficult. That's why trading is difficult, because our emotions get tied up into the process. But if you can remove your emotions from the process, you're gonna have a much more stress-free time. But if you can't, then you're kind of like a what do you call it? Like a feather in the wind. You know, the bad times are really low, the good times are really high, and eventually you burn out. That's why it's super difficult. Like, trust me, I wouldn't be able to do this if I was taking more than 3 trades a day, like, consistently. You know, I've been trading for almost 6 years now. If I was taking more than 3 trades a day, I would probably look 10 years older than I look right now. And I would probably be stressed. And in the end, it wouldn't be worth it. Because in the end, what we're doing trading for is for freedom, right? Time freedom, financial freedom. But you can't get that if you're a slave to the market. And trust me, like, nobody likes to lose. So when you take a loss and you give yourself that break in between sessions, it helps you so much. But if you stick on the chart right after a loss, for example, that's usually how spirals start. And you start giving back gains. So if you can just stick to that, just one rule, 1 to 3 trades per day, managing your risk, like managing your risk on each trade, then you're going to have a much longer probability of staying in the game. Because we're all in this for the long run, correct? Like, you can get away with short-term gains. That's totally possible. But usually for these people with short-term games, how many of them are consistent? You know, some people make good money on these short-term meme coins or with these short-term plays, but how many of them are actually consistent? You know, how far do they actually go? Because they always try and replicate that. And the problem is, it's so much harder to replicate that than it is just to be disciplined. Because once you're disciplined, it's like a drug. You just want to be disciplined. Because if you do this, you get this. You do this, you get this. It's super boring, but it works. It seriously works. Every day, you just do it. You get a result, you don't get the result, you stick to your discipline. Like, it's underrated. The compound interest on discipline is super underrated. I was trying to get on this 1 minute candle like shotgun into consolidation break, but nothing there. This would be a sell I would be wanting to take right here as it broke below these lows. But I don't like the way it pulled up so much. So I might just miss this move. But there's a move that's about to come in right now. It's going to be breaking away from this zone. I love to trade the 5 minute candles, but I find so less stressful focusing in hourly candles. That's also another thing that a lot of traders tend to say is the higher time frames are less stressful because it takes longer for the candlesticks to close. But I don't know, you tell me. Is it less stressful to have a 265 pip stop loss, for example, and be in drawdown for potentially hours? Or is it less stressful to still take the same amount of trades, like less trades, and at least know if your trade is correct or wrong in the next 15-20 minutes? You know, you gotta choose one stress. You gotta choose one. Which one is less stressful for you? Because for me, this was super stressful. This was super stressful. Sitting in a trade like this for hours, just because of the higher time frame. Because you still lose a trade the same way you will lose it on the lower time frame. There's no real difference between that because, you know, markets only move in 3 directions anyway. It moves up, sideways, and bearish. There's no difference. You take the same trade idea here on an hourly setup, for example, and it will still play the same. It could still play the same exact way. But it's all about breaking barriers, breaking fears. You know, sometimes we're like so quick to talk ourselves out of certain things because it's coming from a point of fear. So it's much easier for us to talk ourselves out of it. But if it's like lower time frames are not your thing, then it's just not your thing as well at the end of the day. Some people just don't like them. But it's not to say that they're any less safe than the higher time frames. It's just all about your own ability to trade them. And you get the best, man. We get lower time frame traders, we get the best entries. And we get like these beautiful plays. We play off that higher time frame volume. You see like this setup right here? It already pushed up since the London Open. Since the London Open, it's already moved up here like 195 pips. You know, and that only took about 1 hour. 1 hour for the setup to play out. So a setup like this on a higher time frame, that's going to take you days. Potentially. It's like, if you put your stop loss below here, it's like almost a 1 to 4. You could probably have a tighter stop in there too. How did you find your edge? By sticking in my lane. By removing all the noise. Because so many people are always in my ear telling me that higher time frames are high confluence time frames. Do this, do that. But none of that worked for me. So I was like, man, let me just start focusing on my own journey. You know, like I've learned a good amount. Now let me start actually trying to understand the market for myself. You know, because you can never replicate somebody else like a 1-for-1. But what the values you get is in the concepts they're teaching and in the perspectives they give you. Because, you know, you gotta keep your enemies close. You gotta keep your friends close, keep your enemies closer. So like the more you understand different people's perspectives on the markets, then it's like it gives you an edge naturally. Right? It's the same way as if you're a UFC fighter, the more you understand your enemy, it gives you an edge naturally. You know, maybe that guy is a wrestler, so you have to understand like how they wrestle. So you're prepared for when that time comes. That's how the reversal confluence was also born, is always from thinking of how do other traders losing trades look like. You know, that's why we broke this trade down over here. So it's like, how do other losing traders trades look like when you're taking a losing trade? Because they all have a certain similarity. Like, you all have this intuition. When you take a trade, you know deep down it's a losing trade. Write a 1 in the chat if this still happens to you. You know deep down it's a losing trade, but you do nothing to stop or manage that risk. But you know that the way price is behaving right now, that it's not a good sign. You know, and that's what I mean. Then you're going to look at that. You're going to look at that, and you're going to be next time thinking, okay, so how can I take advantage of this next time? You know, if I'm not in that trade. How? That's how you start building your edge. Better to be a warrior in a garden than a gardener in a war. You know, gardeners in a war, you're just going to sit in your trade like a sitting duck. And then you're not going to learn from it. Man, this thing looks like it is about to drop. Here you go, you're in. Man, I want to get in so bad. But I don't know if the daily is about to flip though. Because it doesn't make sense why it pulled all the way back up here to doji. But it's a really nice retracement up. But I can't take this. I can't take this. I was hoping this same exact thing was going to happen like right here. But it didn't. It pushed up an additional 100 pips. We got some ones in the chat. Yeah, so like trust that gut feeling. Next time that you're in a losing position, the market is telling you something, it's teaching you something. It's only in your ability to actually listen that you get better. But the market is always leaving subtle clues behind, specifically to build your character as a trader. So you get the option to learn from it or not. So that's how you have to change your mental model towards trading. Don't play the victim, because it's much easier to play the victim than it is to analyze a situation. Oh man, look at it go. You're in. This is something I wanted to catch, but damn. It would be kind of slightly breaking my rules for this London session time. But the setup itself looks really clean. This is the same as the one down here. Was still valid to break the highs to move up. This one is still valid, structurally speaking. I have a big concern if an owner of a broker tells his client forex is a fugazi and it doesn't exist. How can one overcome that? If an owner of a broker tells his client forex is a fugazi and doesn't exist, what does that mean it doesn't exist? You have money in your bank account, don't you? You've already done forex. When you travel the world and you go to other countries, that's forex. You change your currency into local currency. So it does exist. It does exist. It could be just a retracement in hourly perspective. If forex didn't exist, why do we have Wall Street? Think about it. Why do people trade? Why do we have long-term investment plans? For just, you know, regular people who want to invest. Like, why do we have all these things? Bonds, stock market. What is all of this then? Where are these people making their money? You know, because, you know, the rich, very limited to how many areas you can spread your portfolio. You can't just be in construction. You can't just build houses, build businesses. You have to spread your money out like in other long-term safe options. So this is what the rich do. And, you know, this is something that's not taught in school, is how to properly look at money. You know, like you have to invest your money. Like it's you know, it's very useless to keep your money in a bank. A bank is just there to hold your money. You know, it's very useless. Actually, you're a liability to a bank. You know, and hear me out. You're a liability to a bank because they have to give you back the money. You know, and banks are not going to offer you very nice interest rates, for example. So you have to use your money. You know, there's certain restrictions to how much you're insured with your money in a bank as well. Before, if anything happens, then you're going to lose the surplus. So you can't just keep all your money in a bank. At some point, you make so much money that you have to invest it. So how would it be a fugazi? Five minute SMA close, so risky. Fugazi, it's a woozy, it's a wazi. How does Matthew McConaughey say in Wolf of Wall Street? That's so true. I can tell I will teach trading to my daughter. My wife is starting now. And I can tell she's going to be better than me because I'm too impulsive. Oh yes, definitely. They say women are more better geared towards dealing with money. They're less emotional towards it. So I'm sure she will. And you know the good thing about it too? It's not even just about day trading, but it's about the overall skill. Because it opens a door to new conversations. You know, so that's why I say, like, if you ever start this journey, you're going to get something for your pain, 100%. You might not get it the way, you know, sometimes in life we want things to happen in a certain way, but we don't get it to happen in that certain way. So, you know, everyone's journey is a bit differently. So maybe you don't become a profitable day trader, but the skills you've learned about the market, you've opened yourself doors to different avenues to invest against and other things. So you've given yourself a skill set, which is going to be even proving to be more useful to you, maybe in a different sort of like path, but you're making it, but in a different sort of way. Correct? So that's why I mean, like, you definitely get something for your pain. You know, at the end of the day, it's not a zero-sum game. It's not about that if you made it as a trader or if you didn't make it as a trader. You know, you got to change that outlook because you're always winning. You're always, whatever it is you're doing right now, you're winning because you're learning something. Man, this is turning out to be a nice distribution here. It's already pushed like 24 pips. Stop loss above here. Clean range. It's exactly what we want to see. TFX concepts. It's exactly what we want to see. It's an inception. Because, you know, the move would be coming out of this area, correct? It wouldn't, like, you wouldn't get much of a move coming out of just candles moving up like this necessarily. Because there's not enough structure. So it's much easier to kind of predict where the market's going to go when it's giving you structure. The more structure, the better. Liquidity grabs, certain patterns. Definitely less emotional because they don't mind spending it. Yeah, they say opposites attract, correct? Like, if you look at a relationship, there's always one person in the relationship who's going to spend more and another person who's going to save more. Hey, Timothy, thank you for the sub. Ooh, wow, look at this. It's a small little head and shoulders in there too. You got one right here. The price hour break below and then moving down. That daily almost flipped. I don't think the daily flipped. It got really close to flipping. This is like basically the trade we took yesterday in a sense, but the trade from yesterday was a bit better. There's a bit confusing price action here. It's like a pretty big sell-off. But it's not like necessarily a trend like this. Yeah, this is more like a nice little trend up and then to continue moving upwards. So like volatility here. So it's hard to say if this is really like a trend because there's just so much volatility in the market at the moment. That's why when this pulled back up, I was a bit cautious. But yeah, I guess like looking back at it, maybe you could say that this was a trend to the downside. Because we're seeing at least some kind of volume coming in. Here and here. Yes, exactly. And just teaching just PA, no smart money concepts, just PA and market structure and timeframes, confluence, timing. Yeah, now I'm contemplating whether to just get the sells. Missed the first one. Because I could have been wrong. I could have been wrong. Maybe the previous daily candle was trending. It was just really volatile. So it's kind of hard to say the difference between just volatile event and an actual direction. Because we seriously pulled all the way back up towards like the daily flip. The hell is that? Could have been wrong, chat. But let me see. Maybe I can get a re-entry somewhere around here. Maybe I'll wait for a bit more structure because I don't like the way this candlestick necessarily closed like that. No FOMO. I'll be right back. Hey, Donovan, thank you for the membership. Could have been wrong about that move. Oh, wow. Why is that liquidity grab there? 5 minute. This reversal confirmation right here. It could be reversing these players above here. So you see how those patterns are always repeating? But yeah, right now, man, I think a break below these lows could be a potential play for continuation. Let me just see how this would look. It would be nice if we can create like a little bit of a support there first. I think that's what I'm probably gonna do. Is I'll first wait for a support to be formed. And then that could make it a bit more clear for me whether we keep moving down or not. Because if we create a support and then re-break those support lows, then we could get a continuation to the downside. Because if that was a liquidity grab on the 5 minute, it should have just moved up. Should have moved up. Now it's creating like an inverted head and shoulders. So this is what I mean. Like you see how the candlestick broke below here? It created a support, broke below, it pulled up. Candlestick does not have a top wick, which is kind of weird. It doesn't have a top wick yet. But you see how it broke below and it pulled up? That should be the liquidity grab right now. And you see with that 1 minute support that's been formed, that should actually pull it up if it wants to continue moving bullish to reflip on the 5 minute. That should be it right there. So that's why I'm thinking it'll be a bit more of a sure thing if we now re-break these lows. Because as a reversal confirmation signal from these players right here, typically it shouldn't break the lows. It shouldn't break the lows. It should just break the highs and then move up. That's typically reversal confirmation signals. They don't typically break the opposite side. Just like the trade that I took yesterday over here, it doesn't break the opposite side. It only breaks the side that it wants to go. So fast 5 minute here has created a top wick, which is nice. It might just get a continuation. This is also a scaling method. Hey, TetraFX, thank you for the 5 gifted. Let's freaking go. Yo, amazing. Man, awesome. Yeah, but remember guys, we're managing risk. Well, I'm managing risk here by like 9.5 pips. Because if it breaks, I just want to see it run down. Join the club, Michael, Zeb, Rodrigo, Leo, Derek. Oh, nice. Derek got it. Because Derek, you got it. Nice. Awesome. Appreciate it, sir. So yeah, that's going to be my trade idea. Because, you know, I missed the first move. So it's not too late to catch the continuation. Because this is a second entry confirmation here. This is also a potential scale in. It's a potential scale in for the traders who could sell over here. And then sometimes we get these really nice scaling opportunities when they're still close to entry. But you see, if it breaks these highs, it's most likely going to target their stops up there. Or there's a probability that increases that these stops above here can get hit. And then the daily is going to flip. You know, so it's all about managing risk. Because if it breaks these highs, we might see some volume come in. There's also a probability it does a liquidity grab there. Stops out the sellers. before having the continuation of the move, because the market sometimes like that. You've all experienced trades like this where it stops you out and then it continues to do that. So that's also a probability that happens. Let's see. I just want a quick and easy trade here, guys. I don't wanna fight with the market too much with this bias. You see it's breaking the highs now. Let's see what happens. There's a very important point right here, what happens next, because now the variables are spinning. You know, they're changing more because this is a no trade zone in here, but the probabilities increase whenever it starts breaking for momentum. Right? Either breaks the highs or breaks the lows. So you're gonna see something always interesting happens here. Either it's gonna distribute or we could get a fake out confluence for these cells. That would be perfect. If candles just start pulling back down heavy, because sometimes like even just the same thing that happened with this trade that I took yesterday, if you watch the video on YouTube, man, like this candle, it broke the highs like this and then it pulled down heavy, and that was a smoking gun. You know, oh, look at this, look what's happening here. And oh, okay, not yet, but that was a smoking gun for why price should melt. But this doesn't look like, let's see what's going on, if it can still respect this region. And remember, trading is not about 100% probability, correct? It's just about doing this consistently, and with time you see results. So that's just a way to not be so emotionally attached. Let's see what we got here. Yeah, now it's a risk-free trade, but it might easily turn into break-even. It looks like that reversal. It's like pushing above. Yeah, I see. It's thinking about it. What did the 5-minute look like? We got a bit of inconsistency there. My broker's closing bullish. Man, it could also be such a hectic grab to the downside. Take partials, put some money on the pocket. Very nice. I think if you already had this first trade be a successful trade, there's no reason to take this next trade, really. But it could still redeem itself. You know, if price comes down like this, maybe it creates a structure like this. Then you're gonna look back at it in hindsight, you're gonna see like this will be a fake out right here. Because we can't ignore still the fact that there's so much volume as well in the market. Like since the FOMC yesterday, these FOMC sells, it's more selling directionally based from yesterday's event than buys at this moment. So only we just had this one retracement over here, which kind of like maybe a bit confused. See, it's got that 8 SMA over there on the 5-minute. Reacting off of hourly SMA. We have an imbalance as well, potential imbalance to fill here on the previous hourly candle, as it moved up so aggressively by like 250 pips. See if this trade here can stay valid. Yeah, it doesn't seem like it. Seems like it wants to push up so far. I'm gonna wait for a bit more structure here, because it's created like a break and a retest off of this zone. Let's try to pull up. Got some clean range on the left hand side. It was a bit strange to see all the way from negative 0.60%. We moved all the way back up to 0%. It's a bit odd. So I figured maybe there's a chance that we've just retested previous accumulation here and they're gonna be forced to buy at these levels. And you could also see the daily flip and then continue moving up bullish. We're still expecting another 25 basis point cut from Powell this year. So that's what I'm cautious about. I have $30 to play with. If I lose, I will be at 2%. A 50-minute close bullish, then the next 50-minute close bearish. Below, we good to go. Oh, yes. We got a new 15-minute here. Just opened up. So we got like a swing entry model in the 15-minute. Clean traffic to the downside. We're still kind of like, we're still on the right side of the market if you're considering the overall pressure that's coming in. So if you're looking for sells, it would still be on the safer side than the buys at this moment. Just create a new one higher high here, but we still need to really respect that new higher highs that we form. Maybe like a swing entry model, but I want a consolidation break. So you got stopped out of BE. Yeah, we're sitting in a massive bullish fog. Hey, that's a nice way of looking at it. Yeah, it's kind of like foggy over there. It ruined my structure though for the entry. That's kind of an annoying thing. So I'm wondering if it can redeem itself because the buyers are trying to push this thing up. You can see by the wicks. Look at the way the wicks are just rejecting this zone. Some odd reason. It's like what happened down over here. See like how the wicks rejected? Bunch of rejections, then it went up. It's starting to get a bunch of rejections, but this looks kind of clean on the 15-minute. The only crazy thing about it, usually a trade like this, if you're going to be wrong about this trade, you're going to be wrong pretty quick. Because if the 5 minutes are rejecting like this, and if it breaks these lows on the 15-minute, you can always have like a 15-minute liquidity grab. Okay, you could still do this, and then start to pull up like that. Because the markets are fractal. You know, you might think you've avoided it on the 5-minute, but it could still have been setting up the 50-minute one. These are the trades that I don't typically like, where you gotta think a lot. So I'm just gonna wait. I'm gonna sit on my hands here. I still think maybe this could even be playing out as a reversal for these players. So we just gotta have to wait here. I think there will be volume flip of the candle, that is for sure. Let's see, you know, there's a few things which always happen here. Remember, we also spoke about the retest and continuation. A lot of these things we can't anticipate until it actually happens. We just know there's a probability of these things happening. So if you're in a sell right now, depending on your risk appetite, you know, you could leave the additional drawdown, but most of your good trades anyway will not give you that additional hustle. You know, so for the most part, if you did get out of break even, it's a good idea, because most of your good trades you see, such as these, they could retest, but they wouldn't give you much of a hustle. They'll just keep going. So whenever you have that mental model of thinking about chart work, you don't feel like a victim if, let's say, you get stopped at break even and it goes in your direction, because you know what you're doing is you're managing the probability of it going against you. Because otherwise you're always losing. you find yourself in a lose-lose position. You get stopped out of break even, it goes your favor, you feel bad. You don't get stopped out of break even, it goes against you, it's your stop loss, you still feel bad. So you're always like in a lose-lose position if you don't make a decision. You can't always be neutral in the market. So I think those are one of the best decisions you can make if this card was played. You know, like when you play blackjack, there's a certain way that you hit and stand. So this would be a stand. You'd want to stand here because there's a higher probability that it's going to cost you more. So you got to stand here. It's a safe place to stand. It's not about getting as close to 21 as possible, even if you have like, you know, a 17 or something like that. It's just about playing the safest card, which is a stand, because you could easily bust. And you don't want to bust here. That daily is a doji again. It's going for the flip. That's an odd thing about it, you know, because in a trending market, this typically would not happen like this. This would just keep pushing directionally. So I think my intuition was a bit right about a potential reflip of the trend. But at the same time, there was a probability this was like a trending directional move from the previous day. But both scenarios were kind of right because the first trade did play out. So it's kind of like a unique situation that we're in here today. You see, now that's a necessary drawdown. That's why I said reversal confirmation. You don't want to play with those signals if you're taking a sell. Remember, chat, this will happen over and over again. I got in on the 5-minute, 15, 30-minute flip of the candle. Little fakey. Took a sell in this mixed bias market today, set up like VIX setup, but in my version, let's see, WSL to BE, hit B, good trade. Ooh, nice. Did that actually create a support up there? Like, nice little swing entry, or market fade. Actually, that's more of a market fade kind of setup. But you could look at a swing entry too. Oh, you see, man, I just knew it. The market is gonna give you those chances, chat. Like, that's why if you took a sell here and you got out a break even, I think that was the best thing that you could have done. You know, if you were still holding the trade. If you were still holding the trade for whatever reason, you know, your stop loss would have been here, your profits would have already been hit, but you know, if you're still holding the trade, I think the best thing would have been to break even. Because, see, the market's going to warn you. And that's TFX concepts right there. It's like, how can we speak to the market? You know, and that's my language that I found how to speak to the market. Because there's a certain pattern in the way these trades are taken. And the losing and the winning trades. But, you know, this can work for all kind of systems. You just have to stick with the system long enough to understand how it operates. But if you're just going to trade my system for a bit and then strategy hop next week, now you're going to be like a mentor hopper. You know, mentor hopping is also not too good. At some point, you have to start taking the foundational concepts and building like a strong foundation for yourself moving forward. See, that daily flip was really suspicious. Like giving back so much gains like that. Because, you know, we could have had a bit of room to move down, but this is a key structural point off the HTF right here. So you see, market environment today is kind of like mixed bias-ish if you didn't catch the sells earlier on. But I think these were the last sells here, the ones you guys caught. Those are the last sells before price has now flipped on the daily properly. That's why the market doesn't like hesitation. You know, when you hesitate, you miss your actual moves that you're meant to take. The second move is like, if it's a hesitation move, it's not as good as a first one. The market doesn't like hesitation. Daily candle flip. Let's also take a glance at GJ. Oh, GJ is running here.
Why are you running? Why are you running?
Holy. Man, look at GJ go. At like 60 pips, 0 drawdown. This is how a trade should play out. You can retest a bit if it wants, but it should just keep moving like this. So if you already know this, that already gives you quite a nice edge to managing your risk. But it has to be in line with concepts which can even get you in that table. You know, your strategy now is the one which gets you to that point where it's like you have a high chance to get that distribution. Your strategy will get you on the table. But if you don't have a strategy and you're still trying to replicate this, you kind of like miss. You can miss a lot. You can end up being caught in a lot of choppiness. So it's also important to understand the concepts as it is to understand the strategy. Yeah, it's reflipping now. Maybe we're going to see gold trend bullish for the rest of the day then at this point if it just keeps moving here. Maybe even go back and target the Asia highs. Just up here. Put a line here. Asia highs not too far off. About 111 pips. Sells might be done for the day. It's kind of like, you know, yesterday's PA, it was mainly sells. And then during New York, it was buys. So you see, like the people in New York session who are looking for sells, they already missed the sells. You know, because New York session is like a different time. You can expect like a different type of PA. So most of those sells were coming in earlier on. So anyone in New York looking for sells, they kind of like may have been offbeat. Correct? Because the way price was already moving up. Because this used to happen to me a lot. I would take a sell in the early sessions. And then I would hold my trade throughout the day. Go for a jog. Go grocery shopping. Do my thing. And then by the time the day is ending, my sell position would be going from profits to the negative and then eventually hit my stop loss before the day ends. So timing is really important. It might be the missing ingredient for some of you. Just understanding the session times, how they operate. Because if you got a strategy and because I never used to look at it myself. I used to just trade the way I trade, thinking it's all the same. It just faked out the sellers on the daily, so buys now look good. We just need a retracement to try again. With this aggressive move up, we will have clean range up from the retracement. So these clean ranges here are. Hourly is coming in quite close. Got 30-minute hourly resistance over there. And it's definitely shifting. Reversal confirmation. Let's go. It's nice to see it play out because that's how you build confidence. The more you see it, the more you anticipate it, you take your trades and you're like, this is the one. This is it right here. Where's that Leo? I gotta bring it out. Yeah, but this is how you feel. Every time you see it, then you're gonna be like, that's it. That's the one right there. See, but you gotta look for it. You gotta look for it. Like, if you're looking for it, you're gonna see it. What just happened right now in gold was literally, as I'm just still explaining to you, in case it's not hitting home yet, this is what happened here yesterday as well. So that was my reaction when I saw it, because I already know it. You see, if you don't know it, you're not going to see it and you're not going to execute on it. But we spoke about this range as well. Very nice. The thing is, like, a lot of my trades share this in common. They will always have some kind of a similar things happening. Hocus pocus. It's going to sweep the Asia high for liquidity. It's a funny name. Hocus pocus. Thank you so much, sir. Good learning. Welcome, Ashi. Yeah, but that Asia high is probably the target. If you're looking at the daily time frame, then what you're gonna see is here psychological marks for the day. Man, this candle can keep moving up. It would not be unrealistic to see all-time highs on this daily candle to push from the open like 500 pips up, break the highs by 3,700. It's well within the ballpark of what gold is capable of doing. It could be like a delayed sort of like FOMC, because buys already priced in, retail traders try buy, it sells, and then now it buys up to continue moving. That's clear manipulation. Yes. Was IMO, it will flip back down, the weekly candle will close bearish. See what the weekly is doing. Got 1 day, 12 hours for the weekly candle. What's the probability it flips bearish? Maybe on a freaky Friday. It's a lot of speculating. See what our fundamentals are saying here for the day. Gold still has a positive outlook despite recent softness. Gold still has a positive outlook. Recent softness. Gold's recent price drop looks a lot like a classic buy the rumor, sell the fact situation, considering how widely the Federal Reserve interest rate cut was expected. Yeah, exactly. Buy the rumor, sell the fact. From when Powell spoke last time. The reactions reflect profit taking in the short term. That's what I mean. Profit taking short term. That's why I'm thinking like that daily support is like a very key area. You know, that's why I was thinking like price is flipping right now. It could just continue moving up because it would have to get through that daily support area. That's the only structure we have on the HTF. And they could be forced to buy if there's a lot of buying pressure there. Such as profit taking is healthy and shouldn't be mistaken as a sign of changing fundamental backdrop. Exactly. Profit taking is healthy. Guys, we gotta understand that profit taking is healthy. You know, securing partials, taking something out the table. You don't always have to have the 1 to 2, 1 to 3 risk reward. It's much harder to have that consistently than it is to secure something every day and manage your risk. Just bears. I think when it comes to like holding trades for those risk rewards, you know what the missing ingredient is? It's not that it's bad to do that. You can do that. I mean, if you look at the way these trades that we take, like how they still play out, you can still do it, but the problem is always chasing it without knowing how your setup actually plays, without having that sample sizing data to what's the probability of having your trades actually become like these running trades. You know, and that's what a lot of us do when we start doing risk to reward, is we just don't have the data to know how far it actually pushes. For me, I know it can push a lot further, but I'm still okay with securing something. You know, I don't need to cash these whole moves, because if I can secure something, that's enough for me at the end of the day. Correct? So risk reward inherently, it's not a bad thing, but overused with a strategy you don't fully understand will lead you to take more losses and will actually cause a lot of psychological issues around risk management and playing the victim, having like, let's say a trade go up a 1 to 1 and then come down against you, or a 1 to 2 and then come down against you. That also takes a toll on your psychology in the long run. It's not a risk-free trade, but it might easily turn into break-even. It's proper mixed bias now, with a probability to take out the Asia highs. He said the market technically shouldn't break these levels. See, that's why I was looking for my initial sell. It shouldn't break those zones if it doesn't want to go down anymore. Like, contrary to what most people believe, the market is not that manipulated. Like, especially gold. Gold is one of the less manipulated pairs. Other instruments, like forex, is a bit more manipulated. There's a lot of politics happening in these countries that can affect price quite a bit. But gold is less manipulated. I tend to see gold can respect price action to the T. That's why you can even see sometimes, you know how efficient the market is? Sometimes you can see price do this. Boop. Like move really fast and then still stop right here. Still stop right here. And then the next candle can open and then do that. You know, but in the middle of this happening, that usually shakes out people. They see this and they're like, damn, I'm losing this trade. Then sometimes they prematurely close a trade. Then you sit there wondering, you know, leave a 1 in the chat if this ever happened to you. You prematurely close a trade and you sit there wondering and hoping that it actually hits your stop loss. Because now it just hovers. You know, it hovers. Then you're wondering, damn, it didn't actually hit. Then it starts going in your favor again. But just because like of those sudden movements, you like prematurely get out of fear. You're not managing, but it's out of fear. And then that happens to you, man, it's the worst feeling. It's the worst feeling because the market's so efficient. It's so efficient. Like, I can even show you an example of this that happened to me recently. Let's see if I can find it. Let me scroll down. Yeah, right here. Look at that. Look at that. Because this is something I know happens. So you mustn't let this scare you. It's until you actually get stopped out of the market because it's so efficient. So you have to make sure more than your entries are being correct. This matters the most. Where are you putting your stop loss? You can butcher the entry. People have different entry confirmations. Some people could have even gotten earlier. But if you have a solid stop loss, that area should get respected. See how close it came? This is not the first time. This happens from time to time. So you can never lose hope just because your trade is in drawdown. Because the market is built to play with your psychology like that. Like, look at how close it came to hitting my... Why did it come so close to hitting my take profit? So close to hitting my take profit to pull all the way back down. So close to hitting my stop loss. Look at this. So close to hitting take profit. So close to hitting stop loss. But in the end, it hit the take profit. But how is that possible? You know, how is that possible? Because the market's super efficient. And the more you have a system that you can replicate, that's not random, is the more you kind of see into the matrix. But if you don't have a consistent system, then you can't see into the matrix. Because now everything is becoming like spaghetti, you know? Everything's just all random movements if you don't have a system. It's 100% sweeping Asia high, then we'll reverse new lows. Let's see about that, sir. So you know what your job is as a trader is to say, okay, so if you think 100% it's going to hit the Asia highs, how can you take a buy here? How can you execute and then leverage off of this move? If 100% it's going to hit the Asia highs. Because, you know, your job as a trader is not to speculate if it's going to hit the Asia highs. But if you think it's going to move from here to here, how can you capitalize off of that move? Because you don't need to be correct. It doesn't need to hit the Asia highs. So if you get your entry confirmation here and it moves like this and you secure something, it doesn't need to hit the Asia highs. But you know, that's your analyst self. I think traders always have two selves. You have one self is your analyst self. We're the ones who say, oh, we're going to go all the way up here. We're going to do this. We're going to flip and then do this. And then the other self is your execution self. You know, these are two different psychological makeups. That's why you're going to find sometimes some analysts, man, they can't even take trades to save their lives. They're really good at analyzing, but they can't actually trade. So you have to find like a balance in between these two selves. Because the analyst self wants to be right. You want to be correct, that you want to see that the Asia highs get taken. So you can say in the chat, you see, I told you guys. I told you. You want to be right. But your trader self, all it wants to do is to make money. Correct? So your trader self, it doesn't give a shit about being right. It gives a shit about making money at the end of the day, having a good P&L. So you got to know the difference. You know, sometimes we don't know the difference between these two mindsets. But you're right. Look at this. It's moving up here. So how could you have taken this trade? Because now that Asia high is acting like a magnet, correct? It's a magnet right here by 36.72. You see this? Getting in now, yes, it's stupid, but probabilities would suggest liquidity needs to be taken. So that's your analyst. See, your analyst is saying this, but you see, your trader self is not able to take the trade. That's the thing a lot about these. I don't know if Jim Cramer actually makes money in the market, but he's more of like an analyst. Jim Cramer can talk your ear off about positions, Nvidia, and like all about these fundamentals and all that stuff. But actually making money in the market's a different story. What is the probability price is already down 0.60% and then go up and reflip back down? Yes, Derek, we actually spoke about that. It's because of there's a structure here on the daily time frame, the higher time frame, and predominantly price is bullish on gold and it should keep moving up because of USD interest rate cuts. So the question is like, if we've already moved down and this is a key level of support, what's the probability then it keeps moving down? Because people will start buying here and that forces other people to keep buying and that pushes price up. Because this is the most recent level of structure. Right here. Because it's like, exactly, like, you know, buy the rumor, sell the fact. Buy the rumor, Friday 22nd August. Powell spoke, buy the rumor, sell the fact. FOMC came out. But that doesn't mean that it should just move down. That's just profit taking, which is, again, healthy. Profit taking, but we're still expecting price to continue moving upwards. So logically, it makes sense that if it was going to reflip on the daily, it would do so after hitting a higher time frame point like this. And that's what I mean. Like when you learn trading as a skill, even when you become really good at analysis, because you know, to be a good trader, especially an intraday time frame trader like the way we trade, you have to make the right decision every day. You have to be right a lot of the time. It's super hard. You know, it can be very difficult. But let's say you're really good at analysis, you can be more streamlined about the trades you take. Maybe you take like 5 trades in a year. You know, maybe trade 5 trades in a year. Maybe you're scaling into your portfolios, but at least you're getting like a very good insight on price action, the execution trader's mindset, and the analyst mindset of how we just broke this down too. Then you give yourself a really good option to get really nice entries. Even if you can't hack day trading, you will still be able to hack other avenues and other realms of trading. Because it's only a money game. It's all a money game. Like, as your money increases, your money makes more money. You know, and I think that's a very valuable skill right there. Because if you, let's say, have $10,000 and you're making 10% returns per year, that's what, $1,000? You're making $1,000. And next year, you know, as your money increases, that compounds as well. So this will compound as your account is getting bigger. So it gets to 20K. You're easily going to be making 2,000. And the thing is, like, that duration between here and here, it shortens. Every year it shortens as your account is growing. So the growth can be quite exponential as that is shortening. You know, so it's only about of like having a bit of a money mindset outside just buy and sell. You know, you're trying to understand money as a whole. Because like it will literally work for you. It's a lot easier. Instead of like targeting let's say like $200,000, it's a lot harder to work towards $200,000, but it's a lot easier to work towards your first 20K. Once you get to your first 20K, that's when the game starts to get really interesting, because you know that's when you really see the effects of compound interest, especially coupled with a skill like trading. Man, what more can I say? Honestly, what more can I say? The first 20K is more of like, this is the goal. So for when I did like a funded program, my goal was not to trade 100K funding. It was to trade 50K funding. Because from 50K funding, you can already do a lot with 50K funding. You don't need to trade $500,000 in funding. It doesn't make any sense, because that money doesn't belong to you. You know, if it's not in your bank account, it doesn't belong to you. How should I let go of my fear of trading? For the past 2 months, I've had this fear. Even if I had my analysis correct, I wouldn't enter the trade and then see it. Oh, hitting TP. What should I focus on? Oh, I think let's see here what's happening. Oh, the fear of trading is just because you're just afraid of losing, correct? Like losing is just not something psychologically. We've always been taught like losing is a bad thing. You know, in school, if you lose, you get bad grades, you get punished for that. You don't get rewarded for losing. So it's like internal, you know, every trader has their own demons that they deal with. Some traders are over traders. Some traders have a lot of fear. Some traders have a lot of greed. So your demon is probably like a lot of fear, which is similar to me. I had a lot of fear. Like whenever I used to take trades, my hand used to shake and my heart rate used to go up, because I didn't really know what I was doing. It might not be the same experience for some of you guys, but that was my experience. And it took me a while to build that confidence in myself. Like it takes a while. I think it took me about maybe like two quarters to really start settling down a bit more. So, you know, just be patient with yourself. Just keep actively trying to get better each day, because you get a lot of confidence from actually following your rules. If you remain disciplined, that's where you're going to start losing that fear. Because if you're not disciplined, it's easy to be fearful. Because let's face it, if you take a trade which you're not 100% confident about, that you don't know if it's part of your rules or not, then you're obviously going to be fearful. Because you kind of feel deep down inside you shouldn't be in that position. So that's where discipline comes in. Discipline eliminates the fear. You know, that's why like firefighters, they've been trained. Firefighters or people in these fields, they've been trained in a certain discipline that when they're going to burning house, it's not reacting off of emotions and fear. It's just like that's when the discipline kicks in. When you go to the military, when you go to war, that's when discipline kicks in to help you stay on track, to help you keep a level head. So it's super important to work on that. You see, you're figuring it out on your own. So it's not the same as if you went to... Imagine learning to be a firefighter, but you didn't actually go to like firefighting school. You're just getting into houses which are burning. You're going to be fearful because you're going to figure shit out yourself. You know, you're going to be like, oh, okay, so this is what I should do. This is what I shouldn't do. You're going to be scared. But if you have like some kind of a guidance, at least you have something that you can hold on to as a foundation to help you like stay on track. Correct? So don't be afraid of investing in yourself as well. You know, the fear also comes from the fear. It comes from not investing in yourself. A lot of us, we're like penny pinchers. You know, you say, oh, he's doing it for free on YouTube. I can learn for free. Or, oh, I can get this for free. We're like penny pinchers. So when you become a penny pincher, you have no skin in the game. Correct? Because everything is kind of like half-assed. And the more you half-ass things, the more you're also like half-assing your own discipline. You're half-assing your own psychology. But once you start to really lock in, I think that's also helping you become more confident in yourself. So, you know, investing in yourself is also really important. Like Matthew McConaughey says, don't half-ass it. If you're going to do something, do it 100%. Because free is garbage at the end of the day. Free, man. Free is not for people who are serious. Free is for the unserious people. Because I knew my first course, I knew I could get it for free. I just needed to Google the guy's name and the course because he was a famous guy. I could get it for free. I was on that webpage. I remember this day. I was on that webpage and I could see it, the download button and everything. I was like, man, I can't do this. How do I want to learn to be how do I want to learn a skill which could potentially make me millions and I want to download this for free? Like, what kind of mindset is that? You know, like, think about it. I'm not trying to push you guys into buying anything, but I'm just honestly telling you, like, what kind of a mindset is that? You want to make millions, but you don't want to invest in your education. Like, how does that work? You know, because people who actually make millions are the ones who are not afraid to invest in themselves. They're not the ones who are afraid to invest in their businesses. They're the ones who take the risk. So how can you not take the risk and expect to get the results? Because, you know, your brain and your mindset shifts when you start making plays like this. And I'm telling you guys this out of love and respect that I want you to get better. Yeah, you see price is still moving up here. Now getting closer and closer. We have like 40 more pips up towards 36.72. That's going to be the Asia highs, currently up 0.20%. It's still not enough for me to be like a trending condition. Needs to push up a little bit more. To withdraw, you gotta withdraw emotions first. Exactly, that's what's happening with me, handshaking and heartbeat rates high. People laughed at me. I used to tell people that, they used to laugh at me. But you know, it's because like people have different challenges. Like we're all so different when it comes to what we're struggling with in trading. For me, it was that, and also I couldn't get above 0.5% risk. I used to reach out to mentors, but they just used to tell me that I was just too fearful. But I couldn't, at some point, I couldn't go above 0.5% risk. Because, you know, the idea is like, if you're already shaking, right? So you say it's happening to you right now, what you got to do is you got to reduce your risk. there's a chance there that you're taking too much of a risk. Maybe you're over trading or over risking. So if you stick to 1 or 3 trades a day, but if you take like a losing trade and you could manage your risk, maybe, you know, you can stop trading for the day. But you got a winning trade, maybe you can compound your wins and limit your losses. Right? So you can look at 1 to 3 trades and just reduce your risk. Maybe right now you're risking like 3%, 5%. Just try to bring it down to something you're kind of comfortable with, but not too low that you don't care, but not too high that you're fearful. You know, it's the reason why people fail funded challenges, because they go from $500 or like, let's say $100 drawdown to seeing $500 drawdown or $1,000 drawdown. And then that starts to mess with them because they're profitable, but they just are not yet adapted to that. Jeez, price is just... Yeah, you got it right here. Asia highs. But, you know, funny thing is there's no entry confirmations even for me yet. I'm just watching price and it's kind of parabolic right now. As you can see, it's just moving straight up. There's not like that much structure to get into a buy. The only structure was down here. You see again, let's look at this. Inception. Inception, TFX concepts, reversal confirmation to continue moving up bullish. That was the inception. So you kind of like tracking that to where it started, right? So this was the distribution here. So how could you have caught this in real time? And remember, we spoke about this in real time. Just because I didn't trade it doesn't mean that I don't know like this happened. I know this. I speak about this. I've shown you examples of this. You know, it's going to happen again and I'm going to take the trade next time it happens, like I did yesterday. But you always got to look at this and say like, how could you have caught? Because look at this. This is just distribution. I'm just watching it go up here and it's just parabolic. You know, so clearly it's just in a distributive phase right now. Same thing as what happened down over here. That was the inception. Price had moved down. You got a bit of structure. Liquidity gap confluence on the 5-minute before price started distributing to the highs. So you got liquidity grab on the 5-minute here. Goes above resistance, broke the highs. Price moved up. So that was distribution. This is also distribution right here. Do you take a trade every day? Yes. I look to take like 1 or 3 trades a day. But today it's kind of like a funny day. I don't know how many trades I can take today. Because I missed my pre-session time. And London so far has been kind of like mixed bias. So all I'm left with here now is pre-NY. Catch you later, Don FX. Thanks for the gifted. How much ballpark do you reckon you've invested in yourself and your own trading journey thus far? I've definitely invested more in courses than I did lose in the market, which is a good thing because, you know, at the end of the day, it also depends on what kind of person you are. Like, I'm a very careful person. I'm a very cynical person. And whenever I move, man, I want to move correct. So I have a good judgment of character. When I saw people like trading and teaching about trading, I have a very good judgment of character. So I could like pick the right courses, make the right investments, but it's definitely in the thousands with a course. But for my actual risk in the market, it's less. I've lost less in the market because I knew if I could lose $500 easily, if I could lose $10, I could lose $100. There would be no difference between. So I was like smart enough to already know that I could keep my tuition fees low. Because I already knew that if you can't grow a small account, you can't grow a big account. And all this is because of the people I was following. I had a very good judgment of character. I was getting the lessons I needed to get at an early stage. For some people, they don't have that judgment of character, so it takes longer for them. They'll see a guy buy a $1 billion Bugatti, $1 million Bugatti, and they'll be like, "Oh, this guy knows what he's doing." But I was not like that, and I think that's actually a strength. The fact that I was going into it expecting to lose, because a lot of people go into it expecting to win. But don't get me wrong, I had my shitty moments where some days I would risk like 5%, I would overtrade, you know, but I would always keep it somewhat managed, that the account would never blow. You know, you're not perfect as well at the end of the day. You will end up overtrading, revenge trading, because you have to do that to learn. To see how that feels like. But I always knew, like, if we're gonna move, we gotta move correctly, you know? Very cautious and correct. Sheesh, nice entry over here. Sniper entry for sells. Fed rates for the let's say Fed rates the 4U boys. You got a quick buy, nice. Not greedy. Buyers make money, sellers make money, pigs get slaughtered. Same exact thing that happened over here. Buyers made money on the FOMC and then it sold. Sellers made money on the FOMC for the sell and then it went back up. So if you were holding either one, you would have been whipped. But if you secured something, you would have been more, yeah, you would have been good. The market likes when people secure. It doesn't always like when you're greedy. You can be greedy every now and then, but most of the time you want to secure something. No trades today? Yeah, no trade yet. DXY down and gold up. Nice confluence, a little bit delayed after the cut rate. Next FOMC is in like 41 days. It should still say 100%. Oh, it changed. 89.8%. Still pretty high. 89.8%. 41 days. T minus 41 days. Dollar strength over here. Oh, we got volume in the market. Look at this. AUD, CAD, Swiss franc, Euro, Pound. Got some waves. You know, that's what the FOMC does. It creates waves in the market. It is awesome. You know, it's actually giving us what we wanted to see, which is volume. Because it doesn't really matter what direction it goes to, chat. It's just like more about a volume thing. It's been long since we saw no trade day. Yeah, that's true. It's been a while. It's been a while. It feels weird. You know, it's the day's not over though. Might still catch some. It's cause you know the reason is I wasn't able to get up this morning. I couldn't get up for this session. I was really exhausted because I went to bed late. So I missed that move. This would have been the sell I would have caught this morning. I think this is most likely the sell that I would have caught right here. Sell accumulation breakout. Or maybe right over here. Actually, could have been this one. Yeah, but that one pushed down how many pips? I'm pushed down 23 pips. That was a pretty fast move. It might have been this one here. But then there's another confirmation right here. And then the buys, I was looking for sells. As you guys saw when I came on the stream, I was waiting for price to break here, but it didn't break there. And then I hesitated on these sells over here. So kind of offbeat today. So I hesitated on these sells. And now the only opportunity left here is the pre-New York, which I think is going to be buys. We don't really have a lot of structure to go off because it's just in a distribution phase right now. I think it might be buys. The ranges are also bigger today. Oh, yes. Being late to the stream feels like a loss. The amount of times I say such nice things in the beginning of the stream, only I wish there were more people. Sometimes drop some really nice gems in the beginning, but majority of people are not here yet. They're like, damn, that'd have been nice. We haven't even looked at the forex factory. What do we have today? We got unemployment claims. Okay, so 263. We're expecting good numbers for the dollar, which should make gold move down slightly. But these are smaller. These are like smaller effect. You know, smaller effect. I think majority of the volume right now is macro driven. So we might just continue moving up anyway. But we got unemployment claims and we got, what's this, policy rate? Monetary policy statement for GJ. Oh, we got official bank rate. We got interest rate for GJ today. But it looks like they're keeping them the same. For pound, I mean. Official bank rate for pound looks like it's going to remain the same. Unemployment claims and, oh, Bank of Japan policy rate as well. That looks like it's going to remain the same too. Okay, so we got some fireworks here today. Ricardo, this system that you're taking like this, man, what if you just look for the trades which go in the direction of price action? Because these are never long-lasting trades. They're like little scalps. But what if you did the same thing but like for a sell? I mean for a buy. This price comes down heavy, then you take the buy. Because if you were still learning, working on holding runners, this is the only way you're going to get those runners. But you need to go like this. Unfortunately, I think your system is more for the opposite. Somehow. But that kind of limits you. Because when price moves up, you're selling. When price moves down, you're buying. Like heavily. Heavy move up, sell. Heavy move down, buy. But ideally, price should be going in that direction. If it's pushing, you see? Those are the Asia highs. Let's go. Acting like a magnet. 36.72. Oh, Don is not here to see it. He's not here to say, I told you so. Look at that. Asia. Asia highs. You see, he got it. He did the analysis, but he couldn't take the trade. Because price is moving up. You couldn't take the trade. But really nice analysis here to take out the highs. See that? It acts like a magnet. So you see when the market has a something in sight, like a goal in mind, it will just keep pushing. You know, you could even have not the greatest setups, but you see the market, it doesn't necessarily know the setup. Like the setup, yeah, it's kind of like the language of the market. But at the same time, you can think of the market like its own beast. You know, like when it wants to move somewhere, it doesn't really matter too much to set up. Like it will just keep moving there. The setup might just give you an option to get in. It might even want you to get in by giving you the setup, but it will just keep moving in that direction. That's how you get like these psychological marks, whether the Asia highs, round numbers. It's like a train. You can't stand in front of gold when it's moving like this. It will just keep going through you. So you see, it's like once you understand just that concept, you see the power of understanding why it's so important to even just sometimes be on the right side of the market. Because maybe sometimes you have like such an awesome strategy, but you're just finding yourself on the wrong side of the market. Do you think it will run all through 3700? Yeah, 3700 looks like it. This is a very important zone right here, 3700. I think so. It's definitely realistic for price to go to 3700 today. It could be even heading up there right now. Or like 270 more pips. But do you know why the market always fast when go down and slow when going up? It's because there's more sellers in the market than there are actually buyers. That's why it's sellers play out a lot faster for that reason. I love my sell confluences. Sell confluences are the best, right? The play out's so nice and so quick. Buys always take a bit longer. Like, you know, it's like two different characteristics, correct? Like the buys are like the bulls. They're more heavy. They do like heavy lifting. And the sells are more quick. So it's like when you're playing a video game, you can either choose to go with a tank or you can go with someone who's more agile and more fast. So that's what the sellers are. They're more fast and the buyers are more tank-like. So like a lot of things in life, it's easier to come down, but it's much harder to go up. You can see it here in the market. Just gravity. Just the same way, it's so hard to remain disciplined like this. You see, these are the W's here. These are like buys. You know, these are W's are like buys, and then the sells are red. Sells are usually red. So it's a lot harder to get the W's, but it's a lot easier to get the losses. Like this by over trading, over risking, not following your rules. That is so easy, but being disciplined, it's most difficult. So it is quite amazing how much the market reflects a lot of these things like in real life. That's why sometimes your process, your progress is more to do with your psychology than how you're actually trading. It's just a reflection of that too. But buyers rules the market majority of the time. Stock market's always going up. Indexes are always going up. But you see, that's why we've been called those investments long-term investments. Those are long-term investments. And they take a while to go up. But stock market crash, boom, that happens real quick. Stock market crashes happen so fast. Have you ever heard of a scenario where you got a stock market bust and then it happens so fast like this? Most of the time, it's like stock market crashes. They crashes so fast that you gotta even stop people from trading because it's just too much. It's what happened with Robinhood and I think it's what happened with Robinhood and a GME, but that was buys and that was also a conspiracy. The institutions got to Robinhood because they were in sells and the retail traders were pushing it up too much. So Robinhood had to stop the retail traders from buying. So it was also a bit of a conspiracy. But in a real world setting, crashes are more likely to happen at a very fast rate than something to go up very quickly. But if it goes up very quickly, that's also known as a black swan event. Look at that. Perfect timing, right? Right by the Asia highs. Now look at how it's reacting. Magnet. The other levels in between didn't mean anything. This is what price is going to go towards. That's why I say, even when I take these accumulation breakouts, those levels are meant to get broken. Like if you got a resistance on the left-hand side, it's meant to get broken. So these are the minor levels that don't mean anything when there's a magnet like this. I want to take a buy here, but the problem is the hourly is pushed up so much and it's a 5:30 a.m. candle over here. I don't know if this hourly will have enough gas in it to keep moving up bullish. Now that pre-NY hourly candle is the next hourly candle to catch a move. Because each hourly candle should theoretically give you a move. I don't know if it just has enough gas in it here. It's kind of outside my timing because a move like this, I feel more comfortable if the London session just opened and we just started stream than this far into the session, but there's another setup there. But yeah, guys, I think I'm going to call it a day here. As it's breaking over here, we got clean range on the left-hand side. I'm going to just wait for this thing to set up a bit more, wait for that new hourly candle, see if I can catch something, but for now, I just want to go and, yeah, I'm going to go and do something else for a bit. I hope you guys enjoyed the stream, and I will see you all tomorrow for London Open. Adios.